In 2019, a man who had never turned a profit walked into the offices of the world's most sophisticated investors and walked out with a check for $10 billion. He wasn't selling artificial intelligence. He wasn't curing a disease. He wasn't building rockets. He was renting office space. But here's what makes this story remarkable. The investors weren't naive. They had seen thousands of pitches. They had teams of analysts. They had every data point they needed to say no. They said yes anyway. This is not a story about greed. It's not even really a story about fraud. It's a story about how one man understood human psychology well enough to make the smartest people in the room forget how to think. And once you see how he did it, you'll start recognizing it everywhere. To understand WeWork, you have to understand the moment it was born into. It was 2010. The world was crawling out of a financial crisis. Millions of people had lost their jobs, and a strange thing happened. Instead of going back to traditional employment, a lot of them started working for themselves. Freelancers, consultants, early-stage startups. These people needed somewhere to work that wasn't their kitchen table. They needed desks, Wi-Fi, conference rooms, but they couldn't afford a real office lease. Adam Neumann saw this gap. And that part, the actual business idea, was good. Solid even. Take long-term commercial leases, subdivide them, rent them out short-term at a premium. It's called arbitrage. Real estate investors had been doing versions of it for decades. But Neumann didn't pitch it as a real estate company. He pitched it as a revolution. That decision, the choice to reframe what WeWork actually was, is where everything begins. There's a concept in social psychology called identity fusion. It's what happens when a person's sense of self becomes so entangled with a group or a leader that they stop evaluating it critically. They're no longer making business decisions. They're making identity decisions. Neumann was a master at triggering this mechanism. From the beginning, he didn't talk about desks or square footage. He talked about energy, about consciousness, about building a world where people did what they loved. His pitch wasn't, here's a better office, and it was, here's who you'll become if you join us. Early employees describe a culture that felt genuinely electric. Neumann would show up to all-hands meetings and speak for hours, rambling, intense, sometimes incoherent, and people would leave feeling like they'd witnessed something important. He gave his company a mission statement: to elevate the world's consciousness. A co-working space, elevating the world's consciousness. And people believed it. Why? Because Neumann understood something most founders don't. People don't invest in products. People don't even invest in companies. People invest in futures they want to live in. When you make someone feel like they're part of something bigger than a commercial lease agreement, they stop asking about unit economics. He hired for belief, not skill. He promoted based on loyalty. He called employees members, erasing the distinction between the people paying for the service and the people providing it. Everyone was part of the same tribe. This is textbook cult mechanics, not metaphorically, literally. Researchers who study high control groups identify exactly these patterns. Charismatic leader with a cosmic mission, language that separates insiders from outsiders, identity replacement, suppression of critical thinking through emotional overwhelm. Neumann built all of it inside a company valued on Wall Street. By 2016, WeWork had raised hundreds of millions of dollars. It was growing fast. It was losing money fast too. But in the venture world of 2016, that was fine. Grow first, profit later. Amazon had done it. So had Uber. Then Masayoshi's son walked in. Son was the founder of SoftBank, the Japanese conglomerate. He had made a $20 million bet on Alibaba in 2000 that turned into $60 billion. He had more money than he knew how to deploy. And he had a theory. In a world of exponential technology growth, the biggest returns go to whoever moves fastest and biggest. His meeting with Neumann lasted 12 minutes. According to people who were there, Sun told Neumann that in a fight, it's better to be crazy than smart. Neumann took that as validation of everything he'd built. Sun invested $4.4 billion, then another $3 billion, then another $2 billion. Eventually, SoftBank put in over $10 billion into WeWork, making it the largest investment in SoftBank's history. What did Sun see that justified this? Neumann told him WeWork would be worth $10 trillion, not billion, trillion. He compared himself to Alibaba, to Amazon, to Buddha and Gandhi in the same sentence. Sun wrote that number, $10 trillion on a whiteboard during their meeting. Here is the data that was available at the time. WeWork was losing $219,000 every single hour. Its business model required signing 15-year leases and renting space month to month, meaning in any economic downturn, it would be trapped paying rent with no tenants. Its profit margins were structurally impossible to fix at scale. Every new location it opened lost more money than the last. SoftBank's analysts knew this. The numbers weren't hidden, but Sun had a pattern. He invested in personalities as much as businesses. And Neumann, in that room, was the most compelling personality he'd ever met. This is the second mechanism. When authority validates belief, the belief becomes unquestionable. SoftBank's investment didn't just give WeWork money. It gave every subsequent investor permission to believe. If the smartest money in the world had already bet $10 billion, who were you to disagree? By 2019, banks that knew WeWork's fundamentals were broken were still underwriting its IPO because they didn't want to miss the fee. Analysts who privately thought the valuation was insane were still writing bullish reports because their firms had relationships to protect. The entire system had been captured by the logic of social proof. Here's why this story is not just history. We are currently living through the largest wave of narrative-driven investment since the dot-com era. AI companies are raising billions of dollars on the basis of future potential that is real, but also genuinely uncertain. The mechanisms Neumann used, identity fusion, authority endorsement, social proof cascades, are being deployed right now, at scale, in industries that actually have transformative technology underneath. The question is not whether the technology is real. The question is whether you can evaluate it clearly when every psychological mechanism in the room is pushing you toward belief. Researchers at Harvard Business School published a study in 2022 on what they called narrative economics, the way stories about companies can become self-fulfilling until they suddenly aren't. They found that the gap between narrative valuation and fundamental valuation was the single strongest predictor of catastrophic collapse. WeWork's gap was enormous and visible to anyone who looked. What Neumann understood and what the AI era is forcing every investor and every employee to confront is that the ability to think clearly about a compelling story is one of the rarest and most valuable cognitive skills that exists. It's not cynicism. It's not refusing to believe in big ideas. It's the ability to hold two things at once. This vision could be real, and I need to evaluate the evidence as if it might not be. That's what the investors around WeWork couldn't do, and it cost them $40 billion. Here's what actually happened in the end. In September 2019, WeWork filed for its IPO. For the first time, the public could read its finances. Journalists and analysts who had been kept at arm's length by the company's private status suddenly had access to the numbers. What they found was not a tech company. It was a real estate company with a valuation built on a story. A company that had put its founder's face on the cover of its IPO filing. A company where the CEO had trademarked the word "we" and then charged his own company $5.9 million to use it. The IPO collapsed. The valuation fell from $47 billion to under $3 billion in 8 weeks. SoftBank, which had just invested at a $47 billion valuation, was forced to take over and write down billions. Neumann walked away with $1.7 billion in exit payments, personally enriched, while thousands of employees lost their jobs and their equity. 3 things to take from this. First, the most dangerous moment for any investor or employee is when belief and social proof align. When everyone around you agrees, that's exactly when independent analysis matters most. Second, charisma is not evidence. Vision is not a business model. And the fact that smart people have already invested is not a reason to stop asking questions. Third, Neumann himself has since raised $350 million for a new real estate startup called Flow. The same investors, the same narrative, the same energy. The question is not whether this will happen again, it already is. The question is whether you'll recognize it next time.